Hey everybody, corporate earnings season is upon us and we are looking or facing a very active corporate earnings week this week here starting on the 25th of October. And I wanted to look at one stock in particular that has had a lot of headline news, is a bit in the crosshair of a bunch of different things, and is set to report earnings here really early this week. In fact, today on the 25th of October. So the stock I'm looking at is Facebook. And so before we even look at anything, just quickly as a recap, some of the things that are going on with the name are related to concerns around its sort of corporate policies and corporate ethics, maybe to some extent. And I'm not here to take stance one way or another, but I did want to just kind of point that out. So as a result of all that news and headline news, the stock has actually dropped quite a bit over the past month and a half or so. In fact, I'm going to quickly bring up a chart, and I want to just show you this real quick. It's hardly noticeable on the bigger picture chart if you really look at just the price action, but basically since the recent highs, all-time highs in early September, the stock dropped about 17 or so percent. So that's a decent correction. So I want to show you two things. And as we look into earnings, one of our core rules in terms of trading, not investing, but particularly for trading, is we don't hold any trades, swing trades, through earnings reports. Investments we do, but not swing trades, just because of the basically completely binary outcome. Over time, if you roll a dice, you only have about a 40% chance actually of making money on these post earnings if you hold them through earnings from a trading perspective. So this is what Facebook looks like. Everyone looks at that yellow line. That's your 50-day moving average. But let's get a bit more sophisticated. First of all, let's forget that very near-term thing, and let's just look at the weekly chart. Now we're using a 50-week moving average, and you can see, with the exception of volatility in August of 2018 into basically the later part of 2018, and then of course the COVID volatility that we had in the spring of 2020, this very simple 50-week moving average has for the most part been a pretty good reference point in terms of support. So we're, from a very simple analysis perspective, now looking at the weekly. The 50-week moving average is held as pretty decent support. But now let's go into what my favorite tool is, which is our own market Rover. I know I'm biased, of course, because it's our tool. But let's see what this stock looks like on our own tool. In the green background, basically it denotes bullish trend, and you can see along the way there were trades to be had. Those are swing trades. You can see they're initiated here, all the way along. Very nicely profitable trades. So the stock basically, or the market Rover, our tool, told us to go bullish the stock in early May, as you can see, of 2020. Since then to where it is right now, the stock is up like 60, 70 or so percent. So if all you did is buy that stock back then when our tool told you to buy it, denoted by the green background, that's almost uninterrupted, except just for a couple of days, which doesn't count. Basically, you'd be up 70%. So that's a nice investment, really, is what that is. So what we're looking at right now is we want to see how this stock reacts after earnings. Earnings again coming out here today, as if you're watching this today, October the 25th. And we want to see if the stock can start to bounce and hold support and continue to resume this uptrend. So we don't have a trade in it just yet, but what we want to do is we want to see how the stock reacts after earnings. I think if the stock can get itself together and get back above 342, 343, it should be in a good position to resume what still is a bullish trend according to our market Rover. Again, the green background denotes that, and I wouldn't be surprised if we get another trading, and I say trading to be different from trend, buy signal, just like all the ones here along the way. If we get the stock to push above 242, maybe preferably 243 on a daily closing basis after earnings, I do think 400 is probably in the cards in the not too distant future. I'd probably call that even something that could happen this year here in 2021. If the stock acts poorly after earnings, then we have to see how quickly it rebounds, if it rebounds at all, and take a position then. But I want to just kind of show you a process that we use from a trend following perspective, adhering to very strict and simple rules from a trading perspective, not holding trades through earnings. Investments, yes, but also really adhering and sticking to the rules of our market Rover, which tells us very clearly when a trend is bullish and when a trend is bearish. And by the way, just so you guys know, if you look at Facebook, it told you to get out of it in February, so you avoided the whole crash, right, the COVID crash, and then told you to get back in. And again, that's what we said before. If you would have bought it there in late April, early May, you'd still be up 60-70% on that investment. Hope it makes sense, folks, and we'll see you again soon.